Welcome, everybody. We are here. I'm here with Jeff Mudrick. As you know, Jeff does mortgages, and we are going to share good news with you today about the Bank of Canada rate announcement, and we're going to have a conversation about this. And what does this mean for you? What are the goods? What are the bads? And we'll kind of dissect what this means. And we'll go from there. So, Jeff, welcome back. I love having these conversations with you. And so the Bank of Canada made their big announcement. Let's chat about that.
What an awesome day. What an amazing Wednesday, where we've been waiting over 4 years for the Bank of Canada to reduce prime rate. And today's that lucky day.
Yay.
The Bank of Canada has reduced interest rates, or essentially reduced the overnight lending rate by 0.25%. So there's kind of three main ways that people are impacted by this. One, if you have an adjustable rate mortgage, which is a type of variable rate mortgage, you will see payments decrease. And I'll tell you about how much in a second. Number two, if you have a true variable rate mortgage, you will see more of your monthly payment go towards principal and a little bit less going towards interest, which is great. If you have a line of credit, you're also going to see your payments decrease. And we'll talk about how much decreasing. Yeah, as well. And this really helps anyone. Like if we're doing bridge financing, it's going to be less expensive. There's a whole bunch of different scenarios where clients are winning because of this Bank of Canada announcement.
Perfect. And so I think what I've learned with chatting with you over the years now is with an announcement like this, the fixed rates are not, this is not affected by the fixed rates, and people, I don't think, understand that. So maybe can we break that down a little bit on what that means for the fixed rates? Because this is really pertaining to the variable rate.
You got it. Yeah. So when the Bank of Canada makes their announcements, and what we're going to see on TV for the next 48 hours is going to be interest rates have fallen. It's true, but only variable fluctuating interest rates have fallen. Anyone who has a fixed rate mortgage, there's no changes. Anybody who is planning to buy a property, fixed rates did not go down today. Fixed rates have remained the same. Fixed and variable rates rise and fall based on two different factors. So while the Bank of Canada lowered the overnight lending rate, that statement does not lower fixed rate mortgages. But what the Bank of Canada said, what their announcement said, did affect how fixed rates are priced. And we see that we've seen a fall in the bond market this morning, which is great. Mm-hmm. Because hopefully that will eventually mean that fixed rates are going to come down as well. Probably very short term, and there'll be something else more information that pops up that will increase the bond yield market. We haven't really seen fixed rates rise or fall over the last 3 months, any significant amount.
Right. And so if someone wanted to know what the fixed rates were, where do they go to see those? Like any mortgage calculators online kind of thing?
Yeah, I would. You can look there. I would say it's a little, the online calculators are kind of what they are. They're online calculators, so they're not accurate all the time. But if you are looking at an online calculator with a reputable lender,
the Canadian mortgage app is what I have.
Great. It's great.
Yeah,
for sure. But if you recognize who the actual lender is, then that will be a pretty good idea of the rate. If you're seeing these lenders who you've never heard of, then there's a reason why they're anyways. So in order to find out what current fixed rates are for your actual scenario, you got to talk to a broker, or if you're working with somebody at a bank, you just got to shoot them an email and
exactly. So you can reach out to Jeff. He can put you on his list of communications. I know every time you give an update, I get the email just kind of breaking down what rates are doing, which is always super helpful. And I always try to blast out a video to my community just to kind of let them know what's going on. Because otherwise, if you don't have that insider information, it's hard to find accurate information.
You know what, too? It's so interesting. So a lot of lenders have changed their policy over the past year with fixed rate mortgages. And I don't know, we're going to dive into this, but let's dive into it a little bit because it's interesting. So a lot of times over the past, since COVID, 4 years ago, a lot of the times lenders would increase and decrease their fixed rate mortgages every couple weeks based on what the heck was going on in the economy.
Right.
However, more recently, we've noticed a trend where certain lenders are not increasing or decreasing their posted rates that we see. Essentially, what they're doing is offering rate exceptions. So if I'm submitting a deal for a client at, and if a client says, oh, I see rates are around like 5.5, I'm like, sure, like that's the absolute ceiling that we'll get. But depending on the day we apply, what's happening in the market on that day, we're likely going to get a lot lower than that. But lenders just don't want to, because it's a big headache on their end to increase and then decrease fixed rates. So instead they're doing these like rate exceptions.
Right. So that's kind of like the insider deal of the day kind of
thing.
Yeah,
that's pretty much it. You got it.
Yeah. And so obviously with this rate decrease, if you are getting a variable rate mortgage, now would be the time to requalify.
Yeah.
Look at new numbers, I guess.
You got it. So the way that qualifying for a mortgage works is you take whatever interest rate is available at that time and you add 2%. And we have to the back end, you got to qualify based on that number.
Yeah.
So because interest rates have fallen 1/4%, if you do want a variable interest rate, your affordability is going to increase somewhere around like $20,000 to $30,000 in purchasing, in buying power, which is not an insignificant amount of money, especially in a market where there are lots of properties on the market.
If you could get that competitive edge, and I actually did see a property went for, I think it was 30 grand over, and I was like, that's something I have not seen in a long time. I have not seen that in a while. So
I think a lot of people were looking forward to this, or were really curious and interested in this June 6th announcement. And to be honest, I am shocked that they actually lowered it. I know there was a lot of talk earlier this year that, hey, it might be April, it might be June. In my mind, I was like, there's no way until September.
Yeah.
But they did it.
I think that was the last conversation we had. I think you were saying we'll probably see something happen in September, but I mean, it's never a good thing essentially, because that means the economy's bad, right? But
that's like the double-edged sword, right? Like the Bank of Canada announcement said, the economy is not doing well at all. This is why we have to do it today. And if the economy continues as is, we're going to see more rate decreases by the end of the year.
Right. And so, which is kind of good for those like myself and, other people whose mortgages are coming due in 24 and 25 or 26 or whatever. There is a lot of people with mortgage renewals coming up.
2.1 million people.
2.1 million. That is
2.1 million mortgages coming up for renewal in the next year and a half.
Right. Now, I actually had this thought yesterday and I was like, I'll ask him on the call because I use the Canadian mortgage app. I encourage my buyers and sellers to play around with it because I feel it's a reputable app to be using. Now, if somebody wants to play around with numbers and see, what is my mortgage going to look like? I know a lot of us are kind of in panic mode thinking like rates are a lot higher than they were when we locked in at 1.84.
Yeah.
So, and people are kind of in a panic mode. If they pop into a reputable mortgage calculator, what do they need to be putting in? Just the rate and what their mortgage is going to roughly, or what their mortgage is, say, like their mortgage
balance. Yeah. Like there's a couple different ways to do it. Like a super, super simple way is exactly what you said. You can go in pretty much the Canadian mortgage app is great. You can go into most online calculators, and as long as they're a Canadian calculator, you'll get an accurate answer. The American ones, the way interest is compounded is different, so you'll get a different answer there. But if you just know your mortgage balance and what the current interest rates are, if you have a rough idea, or if you're projecting, hey, my mortgage is coming up for renewal in 2025, like mine is. If you have a rough idea on where rates are now, you can go and kind of show. And so you need three things: mortgage, remaining mortgage balance, current interest rate, and your current amortization, which is the amount of time you have left on your mortgage. Most people start with either a 25-year amortization or a 30-year amortization. So based on how long you've lived there, but based on the term length of the mortgage, if you took a 5-year term 5 years ago, you will have 20 years left on your mortgage.
Right.
And As long as you have those three things, principal, mortgage amount remaining, interest rate, and amortization, you'll get a pretty good idea of where monthly payments will be.
So when you renew your mortgage, so this will be our first renewal on a 25 year. So that'll be 20. And then say 5 years from that, it would be 15. Like that's how you would continuously calculate, unless you completely change something or.
Yeah, you got it. So depending on the term, like, yeah, if you take another 5-year term next year, then 5 years after that, you'll have 15 years left on your mortgage. But, the goal is for it to never take anywhere close to 25 or 30 years to pay off that mortgage.
Exactly. It's crazy when you look at what you end up paying. It's like, whoa, this is scary. I was playing around with the app the other day and I was like, 100 and what?
It's you know what? It's actually really amazing. I do this exercise with clients all the time where showing them, hey, this is how much interest we'll pay over the life of the mortgage if it's 25 years and today's interest rates, because it's hard to predict down the line.
Yeah.
But guess what? If you make one additional mortgage payment a year, you're saving X amount of dollars in interest. And usually it's like well over $50,000 of interest alone to make one extra mortgage payment a year. Pure interest. So, and you're paying the mortgage down like a few years sooner. So there's so much like little strategy and nuances in mortgages that we can really take advantage of with not a lot of effort.
Yeah.
We see some like really good results.
Yeah. So that's a huge tidbit, little gold nugget there, is to add an additional, even just one payment a year. Doing an additional one payment a year makes that significant of a difference long term.
What we always do as well with our clients is at tax return season, we will have meetings with as many people as who want to chat about it.
Mm-hmm.
But a lot of times, depending on obviously professions and careers and all that, people will get a lump sum of cash for their taxes, and we will encourage to throw that on the mortgage. And here's why. Here's what happens when you throw a $3,000 return on that mortgage, on the principal balance of the mortgage. Mm-hmm. Look how much interest we're saving. It's a pretty good investment.
And it's money that they already didn't have. So the fact that unless you should never be banking on your return as an income chunk anyways, right? So yeah, it makes total sense. And if you're a 2-income household, that can make a huge difference. And I know that like with different mortgage companies, they all have different, benefits to being able to add money onto, like all those funky things that they have. But sometimes you can do like a one lump sum of X amount or.
That's why, like the reason, just going back to an earlier conversation where if we're seeing lenders that we don't recognize on these like rate sites, the reason why some lenders might be offering, 5 basis points off of, from 4.99, you get 4.94. How amazing is that? You're saving $6 a month. That is amazing. That's awesome.
Yeah.
The challenging part with that is many of those lenders, there's a whole bunch of fine print that don't allow for these prepayments. They don't allow you to increase your monthly payment. They don't allow you to make lump sums. They don't allow you to change your payment frequency.
Yeah.
You're locked in, and from a lender's perspective,
it is.
From a lender's perspective, they're like, sweet, we're guaranteed this much money. Sure, we'll take a little bit of a hit up front on interest rate, but we know we're going to get this. Where the big banks and some of the other bigger non-bank lenders allow these prepayments, which is more beneficial than the $6 a month you might save.
For sure. Now, if it were 2025 and you were renewing your mortgage and it was time to make these adjustments, would you be going variable or fixed?
I love variable rate mortgages, and it's never just about interest rate. So it's a matter of like flexibility. And the biggest benefits of variable rates, the two biggest benefits is one, it's the smallest penalty in Canada. So should there be a dramatic life change, or should we want to take equity out of our home, or any and all thing. Anyways, there's a bunch of different scenarios. The penalty to break the mortgage is 4 times less than a fixed rate mortgage with a bank. So wow. It's like,
so the money that you would maybe potentially save with the fixed rate, if you're in a situation, I mean, you're probably still clear of.
You definitely would be. And then also like you're banking on the fact that interest rates are falling. That's one of the reasons why I personally would. But if clients are looking at it from, hey, I maybe don't have the capacity for these higher monthly payments today, then it wouldn't really make sense to lock into a fixed rate mortgage. Yeah,
Right.
or sorry, variable rate. The other benefit of a variable rate is at any point throughout the term of your mortgage, so all variable rate mortgages are 5-year terms, at any point you can convert your variable rate to whatever the current fixed rates are.
Right.
So if you project fixed rates to drop, amazing. Instead of locking it at 5% today, maybe in 6 months they drop to 4.5%, and then you can lock in at 4.5%.
Right.
All banks want clients in fixed rate mortgages because it's kind of guaranteed money.
Yeah, exactly. Right. And that was the other question, but you answered it already, was variable rate mortgage terms. You said are 5 years.
Yeah, there are some like 3-year options, but the rate that clients get on a 3-year is just not really beneficial. And the calculation is the same.
And those who are maybe more on the fixed rate side, who might want to be, locking in the fixed side, would you, I know that you've always really said that 3 years is probably good, but what are your thoughts on, if you're locking in on a fixed rate, what are your thoughts on term length?
I still am standing by a 3-year. And the only reason, if we were seeing bigger discounts on a 5-year compared to a 3-year, like if we were seeing a 5-year at 4.5% and a 3-year at 5%, then there's like a lot more of a conversation to be had. But right now we're seeing a 3-year at 5% and a 5-year at like 4.94 or 4.9. Like it's not
significant.
Not big enough to warrant the extra 2 years of being locked in and those extra 2 years of potential penalty. There are ways around penalties, and again, every client's a bit different. But for me, I have a little bit more faith that rates will not stay higher for as long.
Right. I believe on the first on our second house, when we were breaking our mortgage, I don't know if it was to refi or if it was to buy this house. I can't remember, but there was I think it was like $12,000 or $13,000. Like,
yes,
that's a big chunk. I mean, when you're selling and that's kind of being consumed by that. But if you were like having to write a check for that, you would be like, ooh, I don't want to do that.
It hurts. It hurts. And like the very quick math for anyone is, if you have a fixed rate mortgage with a big 5 bank, the average penalty is somewhere between like 4 to 5% of your mortgage balance. So if you have a $500,000, this is today because interest rates are higher.
It's like real estate fees.
Yeah. So if you have like
your house,
if you have like a $500,000 mortgage, the penalty to break your mortgage is going to be somewhere like, depending on a whole bunch of scenarios, but it's somewhere between like 20 and 25 grand.
That's crazy.
Penalty to break your mortgage with a non-bank lender, if you have a fixed rate, it's usually around like 3 to 3.5%. So around like 15 to 17 grand on that $500,000 mortgage. And the penalty today to break your variable rate is around like 1.5% of your mortgage balance.
So way better than the fixed.
$7,500. Yeah. So, but again, you're paying for it today and it's higher monthly payments. I like to think of it as like an insurance policy to yourself. Sure, I'm paying a little bit more monthly, but to avoid that potential large penalty down the line.
Yeah. And that's a big deal. And the thing is people just don't seem to be educated on these things, which is why we have these conversations, so that they can be well informed and make good decisions.
I get calls probably not every day, probably like 2-3 times a week from clients, just like random find me on Google, or I don't know. They'll be like, Jeff, what's your best 3-year fixed? And before we talk numbers, I'm like, oh, or what's your best 5-year fixed? I'm like, oh, how are we talking 5-year fixed? Like, talk to me about that. Well, my bank is quoting me a 5-year fixed. I'm like, why? What's the strategy behind that? Like, why does it make sense? They're like, I don't know. I just thought that's what you take. I was like, oh, come on now.
Yeah, it's so important. Like, the thing is like, I was saying this the other day about life insurance because it's got me all fired up, but you go into these institutions or professionals or whatever, and you have full trust in them because this is not what you do every day for a living. So you have full trust that I'm going to sit down with you, Jeff, and talk about my mortgage. I'm going to have full trust in you, knowing that you're going to give me the information that I need and that is best for me. Instead, when you're sitting down with these institutions and places, sometimes it's whatever is best for them, and whatever quota they need to hit is what they'll offer you. And which is really awful, because I mean, people need to be guided, and they need to have people in their corner that are going to tell them, you know what, this is not the best for me, because I'm, I've sat at so many different tables and people want to sell their house. And I'm like, you know what, with this whole scenario, the situation, you might as well just stay where you are right now. That's not the best answer for me, but that's the best answer for you.
I think about it like I have a massage therapist and a physiotherapist that I am only going to them because they know exactly what they're doing and tailor their services for me. It's not, oh, everybody comes in with like shoulder pain, so we're just going to treat. It's like, no, let's
the general shoulder. Yeah.
Let's like figure out, why is it happening? What is going on? Which is the same tailored service that clients should need for their real estate services, their mortgage, their insurance, their financial advisor, their everything. Like everything should be tailored to specific needs of clients.
And I mean, even when I got my, when we did our life insurance stuff, which ended up being a bit of a disaster, we've got it fixed now. But she basically said, like, this is what I have on my kids. And so I was like full trust. I was like, hey, if this is what you have on your family, she could have been lying straight through her teeth. I don't actually know. Like, I never asked for proof. And then, it was introduced to somebody else and they just kind of proposed a review of what was put in place. And like, I'm saving $200 a month right now on what we just kind of shifted and changed for life insurance, and I have better coverage. Yeah. And I'm saving $200 a month. So like, significant changes, and you have to be open to the education. You have to be open to the information, and no, you can't trust everybody, but your gut is pretty good to you. And I'm sure that when you're sitting in front of somebody, you can kind of gauge whether they're in it for them or they're in it for you, kind of thing.
Oh, 100%. I was away a couple weeks ago, and I had a client reach out to say, hey, like, I'm in like a tough spot, really need some help. I'm like, I could not support them in that moment. So I offered some names or contacts of people who can support, along with like a list of questions to ask those people. And that prompted me to send you an email and a few other people an email being like, how would you interview a realtor? Like, what information? And I got such amazing responses of questions I would never, I work in the industry, I would never think to ask. Yeah. And because you need that like support, you need that trust in the people that you're working with, or else the advice you're getting might be wrong, or just like, not.
And that's the thing. When people do real estate transactions and the realtor has no idea who's doing the mortgage, has no connection to the person doing the mortgage, I'm like, that's usually like the first thing I want to do is I want to connect with who's doing the mortgage so that we are on the same page. I know what I can help them with. And, everybody kind of knows their roles, but we work together to make sure that the client is 100% covered in every aspect of the transaction.
You got it. Yeah. And that's like, in my mind, that has to be number one.
Yeah. It's silly to me for people to just kind of go with whatever. It just doesn't make sense.
Yeah.
But is there anything else that you would like to add to this announcement, or maybe a tidbit of information? I think we've kind of gone through quite a bit, but.
Oh, I think it's just very interesting. I think, and again, I'm sure we'll have more conversations about the impacts of this on buyers and sellers and what it means for the actual real estate market. But for now, I think if you are interested in a variable rate, there's a bit of a gap between still fixed, like almost like a 0.75% gap. And, it might make sense to start looking more seriously at variable. It might not for your situation. So just talk to somebody, as Michelle's kind of mentioned, talk to someone you trust, and make sure you're getting like kind of all the different scenarios.
And you guys can always reach out to myself or Jeff. You need to start putting your number underneath your name so people can just call you or text you. But yeah, so we can answer any questions. I am not the mortgage person. He is the mortgage person. And so if you come to me with the question, I'm going to him with the question. So I'm not going to answer it, but I'll make sure that the professional does, and I get you the answer that you need. So we'll continue to do these conversations and do our best to educate people on what it is that they need to know so that they can make the best real estate decisions that they can.
Awesome. Well, thanks for having me, Michelle.
We will talk to you again.